It's a lot easier to fundraise if you have something to show that you're being successful already. So if you're really early, then have a really good vision statement. You have a good story, a problem you solve. And explain why it is. But you have to start with that before you can start fundraising. A lot of times people show up to fundraising and they've got no story. They're not clear on what their problem is, and they've got no metrics. So it's hard for me to figure out if I don't know how to invest in that. I don't have a clear picture. So first, have a clear picture of the problem you're solving if you're very early. If you're a little later, have good metrics to show. Run rates, user acquisition, low churn rates, at least a few testimonials. So my first statement is that. The second thing, how long an answer do you want? You want to keep going? Keep going? Okay. Yeah. So now let's assume you have a story to tell. The next thing I'm going to say is start building a network. People invest in people they know. It may not be fair. It's not the way the world works. It just is. The fact is, if they know you, they're much more willing to invest in you. And by network, I mean, don't just show up and throw your cards around. That isn't that helpful. Build a network. Talk to other entrepreneurs. Go to events. Try to get people to know who you are. This is valuable. You do this throughout your career. This isn't just for fundraising. Almost everybody who's invested in me, I knew before I needed money. It's much easier to talk to them then. Okay, so that's the first thing. As for tools, let's go into some very quick ones. Yes, you probably all know LinkedIn. There's also a bunch of things like forums, especially for engineers, Stack Overflow, all these types of things are all useful to connect with a bunch of people. Don't be completely obvious in I'm not going to connect to Sean and say, hey, I'm looking to raise funds, because he's probably not going to accept it. But if he has a reason to talk to me otherwise, it's a lot easier. AngelList is useful. Gust, especially if you're in the Midwest, is useful. LinkedIn, certainly useful. I actually do most of mine by working with other entrepreneurs. I know this sounds a little odd. I build up, and for me, it's mostly talking to other entrepreneurs who know who I am, and then they send a letter of recommendation to a VC they've worked with. This expands my network dramatically. So I work with hundreds of entrepreneurs a year. At least a few of them like me, maybe a few. But the point is they know. Yeah.
I did have one kind of recently, like, I don't like Robert.
I don't like him.
We'll talk about that later. But that is 1 out of probably 100.
Yeah.
It's good ratio. Yeah.
So, but point is that don't just try to go to the VCs. They're very difficult to get to. Think about your other people who would recommend you to people, and that oftentimes is very helpful.
Well, let's talk about that, because the one thing I hate is the cold intro, the wrong intro, the intro at the wrong stage, the intro from someone I don't know.
Yes.
Like you talked about network building. Yep. How do you get intros? How does this work? What's the best way to do this?
So this is a good one. So let's assume for the moment you go out on AngelList, you make a list of about 200 investors. Your first statement is, assuming you've got your story, you've got metrics, do they invest in your field? Have they invested in similar companies in your area? Have they invested the amount you're looking for? I can't tell you how many people, I know partners at Excel, these guys do $10 million. Approaching them and asking for a $500K check, that's the wrong business. That's not what they're doing. They should look, it's public knowledge, Crunchbase, right? AngelList, CB Insights, all these things show what they're doing. You should know that they have invested a similar amount you're looking for. You should know they've invested in companies in your field. You should look at their Twitter and see what the heck they're talking about. I cannot tell you how many people, Manu Kumar, who is from K9, says this. He has a web page that says, this is what I invested, and this is my philosophy. And he has some basic statements. I think one of them is, founders must be technical. If you approach him and you're not a technical founder, you're fucking wasting time. His and yours.
I wish more. I should do that. I wish more VCs would do that. Homebrew, I think, has a great page where it's like, this is exactly what we're looking for. Yes. And it's nice because the founder's like, I want to get money from them. I'm like, yeah, but you're not even close.
Exactly.
Here's the link. But this is where founders struggle so much, where they just don't know how to get started. They don't understand relationship building. Mm-hmm. I mean, I agree. It's a bit of a courting process. Yep. And even with Dave, I think I knew Dave for 3 years before he wrote me a check. I never even thought about asking money, but I built it up. We drank together in Texas and South by. We did all this stuff. It's like courting. You don't get laid on your first date, and if you do, usually it's a bad partner.
Yeah, I was about to say.
You can, but it's like, usually
if you're getting laid with your VC on the first date, you're definitely in a problem.
Yeah, and I don't think a good VC will write a check right away, too.
Yeah.
But even at our demo
maybe
day,
to get you to go away. In my case.
Maybe, or no. At demo day, I think there's the illusion. It happens in YC a little bit, not as much with us. That you go to demo day and then the money rains down, and it's like the stock market floor.
Agreed. That's
actually not true.
That's a really good point. That's a reference here. It's about relationships building up, but it's also about them having confidence in you, and that happens over a period of time. Sometimes that's drinking, but sometimes it's, and this is common for me, I meet with a lot of entrepreneurs or VCs, and I'm talking about stuff, and I say, oh, my company's doing well, and here's my metrics. I'm not asking them for money. 6 months later, they've heard the metrics for 6 months. They go, oh, yeah, I know about, now they're familiar. It's a lot easier for them to deal with you. This is why I oftentimes recommend to entrepreneurs, as you get these connections, do a monthly newsletter to these investors. Hey, here's what we're doing, here's how the company's doing, here's what we're doing. It's familiarity. Yes, we get hundreds of emails, but they still skim through them. They're looking for deals. Remember, it's their job to make an investment. Ultimately, they are looking for you. So, newsletters, monthly updates about how things are going. Don't pitch them constantly. Give them information. Here's a very common one for me. I was approached by, I built up a reputation for knowing certain things. Let's just freeze it. It's actually in security.
Oh, really? What's
it's in
that?
the security space. So
yeah, that's
I'm just
right.
going to
The
avoid
weird stuff.
the topic too much. Let's just say I'm familiar with how to breach certain things in government security protocols. So the point is I got approached by a VC who said, I was thinking about investing in this company. Can you do an eval for me? I went in, I did an eval, and I gave him a nice eval. Well, if I need an investment, that's an easy way for me now to call him back and at least get a meeting. You have value to them. VCs do not have time to do many things that you can add value to them. I recognize this by oftentimes sending like certain VC friends of mine updates. Like, oh, I know you've invested in this company. Here's an update for you on that space, by the way. And it's a very short article. They're like, oh, that's cool. Thanks very much. Be helpful. I do this on a fair basis. I spend a small amount of time every day helping my network, which means I have favors to call in later.
Yeah, I mean, I kind of call that the karma bank. Like, I'm not super religious, but it's like I want my karma bank full at any time because I don't know when I need to cash in. Oh, yeah. Let's roll back on that monthly idea, though, and that's such a simple, basic idea. And I think, like, your flow, you meet a VC, and it's like, hey, I'm working on XYZ. I would love to keep you up to date about that. And that's great. Like, there's no commitment. There's no rush. I don't feel like you're being too aggressive. You know, it's like you're not turning me off. I'm like, okay, cool, great. Very non-committal, but allows me to stay there. And you stay top of mind with this investor. Every month, they're getting something from you. And as we talked about a lot, it's all about selling momentum. So those first few bullet points should be like, we added 2 new customers. Let's say you're SaaS. You know, we did 10K more in revenue. We did this, da-da-da. Like, hit me with the numbers so I know something's happening here.
I'm just going to add one more point to it. Short, sweet, bullet points.
Yeah, no novels. Yeah.
No novels. Most of them, they're reading on their phones. I will be very honest with you. If you send me an email that has more than 3 paragraphs, it is extremely unlikely I will see your 4th paragraph. And if the 3 paragraphs are more than a few lines long, I probably didn't get past the first one.
Yeah, I'm the same way. I'm a skimmer and like, yeah. But this is the challenge where it's like you as founders and entrepreneurs, like you're very passionate, you're very bold, you have all this stuff to say. We cannot consume that on, you know, 100-a-day basis. It's just too much for us. And we have short attention spans. We're thinking about going skiing and like all our vacations. You know, it's like really, really tough being a VC. So like, you know, make it easy for us. Really, really short and succinct. And I think the ideal format is, yeah, it's 3 bullet points to start off with. Yep. That's the hook. And we talk about this in pitching too. Like, you don't want to get up there and do this long, drawn-out pitch where it's like it's your life story times this and that. It's like you get up there and it's like, yeah, we're the best solution doing this. We're doing 100K a month. You know, you're just like hitting me with things that are like hooking me. Same deal with that email.
Yep.
Yeah.
And by being short and sweet, it will probably get read. And I'll also add one last tool statement to this. You can track emails. This is very simple tools.
I turned all this off because this is very annoying to me. Where I had a founder. He was here actually. Yeah, well, it was I think he is in Galvanize, but like he came up to me and was like, I saw you with my email twice, or I saw you with my email 3 times. Why didn't you write back? Yeah. So I turned off all that shit. That drives me crazy. So but others
some people
don't.
do. Yeah,
others don't.
So I was about to follow that sentence with, but be polite
Use
about
those?
the whole thing. So,
that's okay.
Yeah,
we can have some counterpoint. That's okay.
Yeah. So don't walk up and say, hey, I see you open my email. That statement is exactly why it's bad. But it is important.
Once again, dating. Like I've been standing outside your window watching you.
Yeah.
Do you want to go on that first date now?
I'm not stalking you, but do you really think that underwear went with your socks? I mean,
exactly.
Seriously.
It's too much.
But my point is like oftentimes I'll send presentations and I want to see if they've opened or reviewed them. It depends on your point of your relationship, but tracking is useful for you, but don't be overly aggressive about it. And it just is. But I'll phrase it differently. Most VCs, I mean, good. I will tell you, all of my systems are blocked. Good luck. I block out all the pixels, all that.
Me too.
But a lot of people, it's okay as long as you're not super aggressive. And it's helpful to you.
What about other tools? Because I think the one challenge with founders, like you got so much going on, you live in a world of shit, everything's crashing, building crashing. How do you keep track? Boomerang, stuff like this? Like, what do you think are the real tools to use?
Depends on the company. If your company has a CRM in place already for your sales team, you can use that for fundraising. How many people have you contact? Last time you contacted them, you can put them on drip campaigns.
Yeah. Okay. This is like a streak, like a Gmail
Streak,
plugin.
Pipe Drive. Well, if you have a lot of money, Relate IQ, a Tout app. All these types of things can be integrated. Well, Tout app isn't technically CRM; it's a drip campaign. But you can use your sales tools to approach them. Here's my statement. For me, it's a very systematic process. I make my initial lists. I write down when I've contacted them. I say what I've done with them. I keep track of it either in a spreadsheet or a CRM. It's a process for me. It's a daily process for me. And that's how I do it. Some people prefer to do it in these blitzes. I don't. I like to do a little bit each day and just keep looking for interesting news to send them, keep dripping along on this. But the most thing is I track it all. It is a complete waste of your time if you're sending an email and you're not tracking who you're contacting and when. The worst is here's an interesting note for you. VCs have cycles, they go through events or other things like that. If you know they're going to an event, that's important. I mean, okay, I'm going to go to that event or not. It changes how you do things.
Yeah, I've been stalked at events too. Like, I think that's why Dave doesn't go to as many events anymore, because he can't get through the door. Yeah. It's just every few feet. But what's the etiquette? Should they come up? Should they hug me? Should they lick my cheek? Should they follow me? What should they do?
Well, I followed you. That worked. No. So I think for me, cold is very low yielding. I don't think I've ever sent a cold email and gotten an investment. Most of mine, I think, as I mentioned earlier, were for introductions. I have a friend, he got invested by, I'm making this up. This is not a truthful statement. Fred Wilson invests in a friend of mine. He did very well. He had a successful exit. I say, hey, would you do me an introduction to Fred? And if he does an introduction, it's much more likely that I get a conversation. So that's how I do it. But this takes a long time. Not everyone can do it that way. So your statement about events, I actually don't attend major events. I actually attend things like Startup to Startup, Stanford Angels and Entrepreneurs, much smaller ones. But the big thing for me is I never pitch them my company. I get to know the person, I talk to them about, I don't pitch them. Because as soon as I pitch, their defense mechanism goes up. I just want to, hey, you're interested in this?
It's not the right venue, though. Because, well, especially, let's say you give a talk. Yep. And that's the toughest thing, where you give a talk and there's a few people afterwards, and then, but it's not the pitch. It is, once again, love to tell you more about what I'm doing. Can I get a card? So you're doing lead gen, I guess. Yep. Yeah.
In the best way I'll phrase it, and I'll go back to his statement on karma, if you can offer them something first, it's much more likely you can get something later. I know it sounds a little weird, but it is human condition that if somebody gives you something, even if it's trivial, bottle of water or something, whatever, you feel the need to return the favor. This is called reciprocity, if anybody. I manipulate this all the time.
I'll be aware of this now.
How many VCs I've walked to at an event and handed them a bottle of water, and I get 3 minutes of time.
Yeah, that's...
I can tell you very rarely do people notice it unless you're doing it very badly.
Yeah, and if you've just done a talk, you're so focused on delivering, and then also it's a bit hectic, so it's probably like Oasis. You're just like, yes, water, please.
Again, the bigger problem is if you hand them a bottle of water and start pitching your company, it's obvious. So I'll give you an example. There was a speaker. I was at an event. I forget Jim from Maven. Jim Scheineman? Anyway, I've known him for a little while. We've bumped into a few times. And he was giving a talk, and I noticed that it was running late. So I actually found him, and I said, by the way, it's running 20 minutes late. I figured I'd save you the time. And that's it. I walked away. He didn't know who I was. He didn't care that much at that time. After 4 or 5 interactions, after he got done talking, I chatted with him again. Didn't pitch. A year later, we have a very in-depth conversation about a financing. At that point, he sort of knows who I am. Still, haven't pitched him. After that, he came up to me and said, well, what company are you doing? Now, I talk to him about my company.
That's a good sign. Like if the investor is pushing, they're showing some intent. It's much easier. But we should also classify too, the worst thing you could ever do to investors, busy people, you never walk up and say I want to pick your brain. This is the worst thing. So don't put this in emails. Don't investors, mentors, anyone too. It's we have such little brain left. We're busy, and it's just a weird thing to say. And I guess the other challenge is I get this too, where people they take the romancing too much, and I want to take you to your favorite restaurant. I'm going to take you to the best. I'm just
that creeps me out actually.
Well, it's I mean I'm trying to work through a lot. I'd love to sit down with you for a half hour. I don't know if I'm ready for a 2-hour dinner.
So the note on this is
happens.
think of a lot of this as like you're selling to somebody who gets sold to 10 times a day, right? It's really pretty overload. So a lot of times your techniques cannot reflect the standard method. Here's the interesting, and you'll notice we're saying this. This means, if you look at the overall of what we're talking about, it's a long, hard process. There is no shortcuts to this. There very rarely is. Demo day is not going to work unless they've got some information. There is a long process to a lot of this. That means I cannot tell you how many meetings I've had to sit in that were a complete waste of my time, but I did it because I wanted the karma or I wanted something from someone. It just works this way. I actually feel bad for people that have just graduated from college or trying to fundraise for a company because it's brutal. Now there are a handful of companies like
now you're scaring him. Please stop.
Yeah.
Let's move through that process because no, I do agree. It's long and painful, and also like it will always take 2 times to 3 times longer than you'd expect. So if you're always like, oh yeah, we're going to raise this in 3 months, you will be raising for 6 months, guaranteed. Time of year is important too, and like people, I've screwed this up before. It's like, oh yeah, we'll be done by September. But all of a sudden, like November comes around and we're not done, and then it's like everyone's really checking out, and things are getting pushed even further. So, but I actually let's move through this. Like speaking of courting or dating, let's get beyond first base. We got the card. They know who you are. They call you into the office. What is that meeting? What should I do as a founder?
Okay, so let's talk a little bit about the process here. So remember I talked about you have to have your story. Here are the 3 main components. You should have a very brief elevator pitch ready. Very short, simple, easy to understand. You should have practiced this on a bunch of people. Here's the way to practice it. Go to your mother, give your line to them. You've got 60 seconds, and ask her, what do we do? And she says, I don't know, dear. It's a bad pitch. People should get the idea of pretty much what you are and approximately where you are in the first 60 seconds. 60 seconds is actually really long. It should be more like 30. That's the short version. This isn't so much for VCs, it's for conversational. You'll need this. Second is a 3-minute version, sort of a slightly longer version. And the next is your 30-minute version, which is what you're going to use for meetings. So the investor says, why don't you come by and talk to us? You should have there's a 10-slide template. I send this out, lots of investors send it out. It's a slide template that you should use for these meetings. It asks 10 questions that need to get answered for the meeting. Okay? You'll notice 10, not 60 slides, not all the time. It's a very short summary of their company in 10 slides. When you go to the meeting, though, so this is my standard. I go to the meeting, please do not open your laptop and start your presentation. I personally don't like this. It's bad.
I agree. You should give them the option. That's what you're saying?
What would you like? The first thing I usually do is I talk to them and I ask them a question. Hey, have a small conversation with them. You might find some interesting information. Oftentimes I say, well, what would you like to get from this meeting today? And a lot of times the answers to that question will steer you along. I cannot tell you how many times I've been in a meeting where somebody comes in, well, I looked at this slide, but I just don't understand how you make money. Okay. Well, so that's a very important thing I need to answer in that meeting. If you don't ask questions and you run blindly, it's only a random chance that you answer the key questions in their head.
You can lose them too, where it's like they start spacing out, they get on their phones, because presentations are fairly boring. And especially for 500, it's like, no, let's have a conversation. Just going to have back and forth, and we're going to sort of suss this out and see what's there.
So I'll come into a conversation with them, and usually I've done enough background where they know they're investing in my area, and I say, hey, I see you invested in this company, or like this. We're similar to this, only we make a little more money, our margin's a little higher. Now he starts talking, he's like, well, how's your margins higher? It's a conversation. We're talking about my company, but it's a conversational. He's going to follow the important threads to him. Before the end of the meeting, I want to make sure I've gotten through the main areas. You have that 10 slide, but realistically, most VCs will guide the conversation. They'll say, we invested in this other marketplace, and they had this horrible problem. Oh, well, here's how we solved that problem. You're answering their key concerns. By the end of the meeting, if you've done this well, they don't have their concerns anymore. There are no hidden concerns. Okay? Does that make sense?
So that first meeting typically is with one partner, right?
Yeah. Generally, it's going to be, oftentimes it's an analyst, depending upon where you are.
Let's not talk 500 because we do it a little bit weird. Let's talk standard flow. What happens at the end? What should they do next?
So there is a bunch of things that are good for the meeting. So the first thing is, this is common, I have a conversation with them. Usually somewhere in there, I run through the presentation. Usually it's only about 10 minutes of presentation, just to make sure they have it. And then I say to them, does this look like it's a fit for what you're looking for? And sometimes you get some concerns, too small, too early, some things like that. And you say, okay, well, if it's a little too early, what is it you're looking for? What's the stage you're looking for? Okay. And if it really is bad, this is me personally, I call a shot and I say, well, I certainly understand that. I'll keep you updated when we reach that milestone. They may not invest now, but maybe in a year they do. Again, back to the whole networking. You're building this for the future. If it does look like an okay, don't press them for an answer. They're not going to give you an answer in the meeting. What you want to say to them is, does this look, well, it looks interesting. You say, oh, would you like any materials for your partner meeting or something like that? You want to get something called a call to action in there. But remember, these guys get this every day, 10 times a day. So if you go, well, can I call you tomorrow and see if you have an answer for me? They're going to blow you off, right? They're not going to do it. But you can say, if this looks interesting, I'm happy to send you some materials to make sure you can bring it to the partner meeting. What would you like me to include? It's called, you're giving it to them so it's a nudge along that they're going to have a partners meeting, you want to follow up with them. But it also gave me an excuse to send them an email, a follow-on. You want to be able to initiate action. If you say, oh, thanks for having a meeting, let me know if you're interested. Now you've got no action to take. You're waiting for them. And honestly, they'll probably forget. Even if they were a great company, they're probably going to forget. But if I say, well, I'll send you some follow-on material, I'm going to remember. I'm going to send the email. It gives me a reason to do an action.
Well, let's say that meeting goes really well. In fact, I really hit it off. Things are going well. And then I emailed them. I don't hear back. Then I email again.
That's
I don't hear back.
80, 90%. Yeah. I mean, the fact is
what do you do?
So, well, I'm going to actually mention this is more personal than maybe general advice. So, the first thing is, generally speaking, if you keep sending the same email, hey, you didn't respond, this is a waste of time, and it actually discredits you. It's you're lowering beneath. You're like, oh, I'm desperate or whatever. I put them on a trickle campaign and I send them some, oh, I see you invested in this. Congratulations on this investment. And this will go on sometimes for a while. I try
so
to
you're looking for topical reasons to re-engage.
Or something of interest because I want to keep the conversation going. And it reminds them enough where if they really were interested, they'd follow me up. I will point out that some people disagree with me on that. Some people are actually go into more aggressive. It's just not my style. Yeah. I build my network for the long term. I have large numbers over large periods of time, and that makes it easier for me. If I received a personal introduction, I might ask the person who did the introduction, and I'd send them an email sort of pre-written for them to send along saying, hey, I heard you met with him, how did it go? And maybe they'll respond to that other person. If I had no other introductions, a lot of times I look for things that are topical. Also, by the way, things like Newsly, Nuzzle, and a few others are really useful. I run search every day on everybody in my contact list. It runs a search. It just tells me what they're up to, key things about them. And if I've noticed they've done a key investment or key action, I'll send them an email saying, hey, it was great meeting with you 2 months ago. I just noticed you did this investment. This looks really cool. I'm glad you guys are still active in this field. Not asking for anything. But
I like those because I can delete it and not have much guilt.
Yeah. That's the whole idea.
It's nice.
But it reminds you of the company and the person.
Top of mind.
Yeah. You're constantly bringing yourself to top of mind. Every now and then, and it is very small, you'll get an answer back like, oh yeah, how are you guys doing? Now he's now invited you to give him an update.
I've done that. Yeah, what's the latest? And get some updates.
I do this all the time because I get overwhelmed. I can't get to an investment. I do this all the time. I say, oh, what's the update? Succinct, short metrics that are there. Especially, here's the really, if you're good at this. If in the meeting they said, we invest in revenues of blah, you could say we're 80% towards your stated goal of revenues of blah. It showed you listen to him and you're replying. Now he knows you're paying attention, so your emails are more worthwhile reading.
I would never do this, but what about the VC you're engaging with them and him and her is like, oh, have you tried this? Have you thought about selling cars?
Yeah, pot-shotting.
Yeah, why don't you do this? Why don't you do 5 different things?
I never do that, but you should hold the mic.
Yeah.
So pot-shotting, I call it pot-shotting. It's advice giving, whatever. It's very common. Here's the biggest mistake. You get into an argument. Most people are smart enough not to get into an argument on it or disoragree. But some people do.
Yeah, those meetings get really awkward when
the meeting gets awkward fast, actually. So here's the thing. I'll offer you a piece of advice for it, and here's mine. Take it in stride. That's interesting. Here's mine. So Eric. So Eric says, Rob, if you just double your revenue, you'd be more successful. Thanks. So insightful. So here's my response to it. Really, Eric, that's great. How might you go about doing that? It's a conversation. I want to draw him into a conversation on this, partially to accomplish to see what he's poking at, but also partially because it allows me to learn something about him. But I'm not going to disagree with him, but let's use a different piece of advice. They say, well, have you thought about getting into the North African market? I say, oh, what is it about the North African market that you think is so interesting for us? You're going to learn a lot about them and why they're investing. And so when you do that follow-on email the next day, you say, thank you so much for the North African. I noted you said that it's because it's, 2 million untapped users. I did some quick research. It's actually about 200,000 users based on this report. But it was really a great idea, but we think, disagreeing, maybe. Most of the time, I would just send them an email saying, thank you for this, here's some stuff. Be pleasant and nice. But every now and then, I have actually gone back with information, and believe it or not, this is a little weird, if you're very good about the email, they're actually thankful, because if you give them better, like, oh, you said it was about 2 million, this is a research report that shows it's about 200,000, it was a really good idea, maybe the 2 million was referencing this other thing, give them an out, let them feel smart, but you know the market better than them, you have to be very polite about corrections.
Yeah, that's true, and it's funny, there's a company in the next batch said, like, there's an argument going on, and I'm just like, well, you've lost it. You're arguing so much, and you're coming off very negative and nasty. And we're really trying to be helpful and give feedback. Doesn't mean you have to do this, but I know when I raised, there was this one fund. I really wanted this fund, and he was like, you should try this different. It was e-commerce. And it's like, you should try this different type of revenue stream. Right. And I actually did test it, and I went to him and said, we tested it. I spent $600 testing it. Got nothing out of it, and actually he was so impressed that I tested it.
That's actually really good. If you can test the advice,
and it was, to me, I was like, okay, they were going to write a big check, so I was like, $600, I can deal with this test, and I went back with them with the data, and I was like, you know what? Compared to our other products, the sell was much less, the margin was lower.
I think that's actually an improvement on my answer. I'm going to take his answer over mine, but I was trying to get at the same concept, which is data is really useful. Trying not to be argumentative, but I'm going to actually take his answer as better. If you can actually do a test and show him the results for your company, it's even better.
Data all the way. There's two things that don't lie: hips, which we've learned from Shakira, and data. Yeah. Data doesn't lie. Yeah.
By the way, I do want to make an interesting.
That one took a little while to set in, but yeah, that one works. Okay.
It's a reference. I do want to make an interesting note for some people. How many people think VCs make decisions in a very logical, data-driven way? Raise your hand. Logical, data-driven way. You're investing on a logical, data-driven way.
Let's talk early stage, because I think most folks are there. That's like pre-Series A.
Yeah, pretty much. Yeah. It doesn't happen. It doesn't really. Data justifies the decision they've already made in their head. But they need it to convince everybody else in the room that they're actually using data to make the decision. That's how data works, especially in early. The fact is, think about yourself. How many times have you seen something, you make a very quick snap decision whether you like it or you don't, or you're going to do it or you're not, or you're going to do parasailing or not, or whatever it is, and then you look for facts to convince your wife, husband, daughter, whatever, that it's the right decision. That's exactly how VCs work. That's how the brain works. It's nothing to do with VCs, it's how the brain works. Data helps them support their decisions to their other partners and publicly. The fact is they've made their decision emotionally. Emotionally, to get to that decision, especially early, they have to be inspired by it. You have to have something great. This is a problem we have a lot of 500. We get companies where we score them on a score from 1 to 5 for all these categories, and the company's all 3s. There's nothing inspiring. There's nothing great. You have to have something great, something they latch onto. You say, this is why, this is awesome, and here's the data to prove they're awesome. You got to have both the emotional hook that makes you seem great, whether it's your team, whether it's the market, whether it's your technology. Something has to be great. And then you have to show some data to prove. They use the data, but the fact is the emotional hook is why they're going.
Also, if you have questions, interrupt us, throw them out there anytime, raise your hand.
The question, oh, we're doing blah, 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 blah. I don't ask for money. I say, we're doing blah, 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 blah. Are you interested in that field? I ask a question. People engage in questions. Don't be afraid to ask them. Don't ask dumb ones. If you're talking to Fred Wilson, don't ask if he's a VC, because if you don't know that, you shouldn't be, you're wasting his time. But you can say, if somebody asks you, what do? You say, oh, we do this. This is, remember I said that short, less than 30 second, that 30 second? Use that. Blah, 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 blah. Is that something you're interested in? Do you invest in that? What do you do? Ask them to engage you. Rule of thumb, 3 seconds buys you 30 seconds, 30 seconds buys you 3 minutes. Rule of 3 goes something like this. In the first 3 seconds, they have to hear something interesting enough to justify 30 seconds of attention. If they don't hear it, they're thinking about their email. If in the first 30 seconds the topic is interesting enough, you get sort of the right to talk for 3 minutes. This is why structurally why certain types of things work on demo day. So in your opening thing, state clearly what you do. And then say, is that something interesting? Because a lot of people say, no, I'm really not in that field. The other 2 minutes and 57 seconds you would have talked, he would have been completely bored. You saved everybody time, but you also saved reputation, because now if you say, oh, well, okay, you're not in church field, now you can get off the topic. He hasn't said like, oh, this is just a rambler. You haven't lost anything. Does that make sense?
Yeah, I think be venue specific too. So it's like events, dinner, it's like you're doing lead gen and building relationships. Demo days, in the meeting or in a pitch prep thing, in their office, it's full on, you're in the war room. Yeah.
Yeah, I mean, I have to admit, yeah, if they've invited you to come to a meeting, you come into the meeting and you start chit-chat for
and you start bullshitting.
Yeah,
it's
they're
like,
like what's going on
they're
here?
like
right?
looking, they're waiting.
Yeah, they're looking at their watch.
Yeah.
So, I mean, once they have invited, once the thing, hey, I want to hear about this, that gives you some permission. Just the rule of thumb is 30 seconds gets you 30 seconds, 30 seconds gets you 3 minutes, 3 minutes gets you 30 minutes. Basically, you have to qualify past those. So if you first meet someone and give them a 30-minute pitch, it's unlikely they're listening.
Let's talk about things they want to hear. Like, what are the data points that VCs want to hear? Like, let's go through the acronyms.
Oh, okay. Oh, wow.
Buzzword
bingo. Hey.
Yeah, but let's like stack rank them. Like okay. What's the most important acronym?
Okay, so I'll give you my preferences. How's that? So if you're an e-commerce company or something like that, basically, GMV, margin, ARR, right? Churn, average revenue per client, things like
ARPU?
that.
Yeah.
Yeah, ARPU. Thank you. Sorry.
Yep.
Running into my accent.
I just like it because it sounds dirty. It's
yeah,
fun.
I know.
But does everyone know what all those are? Just to be like super clear. And LTV, everyone just to make sure everyone seems okay. It's okay if you don't, and if you don't, raise your hand and we'll go through.
Yeah, we'll go through it. I mean, if it's a B2B, there's slightly different ones. And actually, let me separate the difference between very early and slightly later stage. So very early B2Bs, I want to see what is the, sort of what's the problem and what are you solving. There's not a lot of metrics if you haven't actually shipped anything, but as soon as you are, it's sort of, average sale price, time, how long it took you to deploy, how much customization, right? Churn rate, resell, things like that. But it's mostly around a lot of revenue once you get going. And then things like churn rate, things like that. For consumer products, I'll leave you to consumer because you probably do. I do mostly B2B. So if people are pitching me B2B, my first thing I want to know is what problem you're solving, right? Who is this? What's the customer look like? And then from there, a lot of it has to do with the structure of the revenue, how you're getting paid, are you getting paid, is it booking, is it whatever, and how it's growing, churn rate, things like that, and who's buying it. That's for B2B stuff.
What do you think, though, is the ideal equation where you have one or two sentences, and so it's like, I don't know, let's figure this out. I'm trying to think, but
I think the big one for me, there are two key ones. That's going to be your MRR, your monthly recurring revenue, and your growth rate. Those are the two.
So we're doing 10K a month in revenue. I would probably say, we're growing 25% month over month, and 10K.
Yeah, and believe it or not, especially early, your growth rate is actually more important than the base.
Yep.
I mean, because the base is at 4K, it's not that big a deal. What I care about is you're growing 40% month over month. So growth, and I actually do a presentation on this in 500. We actually have a ranking system. I actually list in order of precedence things that are valuable. But basically, revenue, right, and the growth rate of the revenue, user base and the growth rate of that, and then you get to things like downloads, which are not very valuable, actually.
Yeah, and I would avoid the vanity stuff, the engagement. You never want to go
metrics.
I
hate custom metrics. Drives me bananas. People come in with these,
this
is our GMCZR4.
Or we have 10,000 kudos a day on the platform or something.
What the heck is this?
What's a kudo?
If your mother doesn't know it, it's jokingly, but you should never do custom metrics. There's actually, Andreessen published 16 metrics.
That was a good post.
That was a good post. I recommend it. It's probably better said than I'm saying it. Those are a very good set of metrics.
Because I think a lot of times these investors are asking because they want to see is this person competent? And I can tell you first time I fundraised, I blew it because they had a lot of questions around churn, and it was a subscription business, so I should have known really what it was. But it was early on in the business, so I didn't have a lot of data to work on. Completely blew the meeting and first round capital, which is great fun. They were ready to invest, and I blew the final meeting basically.
Oh, so did I. I have more. I have many a story of me blowing things. So we only have a few hours.
Well, listen,
so I don't have that much time.
This is a family event, so let's please calm down.
Yeah.
Jeez.
Wow.
But
I'm going back to this topic.
All right, let's get back on track.
Yeah, so
churn rate.
Definitely.
Churn rate I think is critical, and people don't always understand that. And what do you think is healthy churn? What is healthy? What to you?
Oh, okay.
Broadly.
Depends a lot on the business. So let's go through a couple of it. So the first thing is, let's assume someone comes to me and they say, we're growing at 30% month over month. We've got a 10K MRR. And then I say, okay, it's a subscription business? Yes, it's a subscription. You know, people subscribe for a year. I said, okay, great. I said, what's your churn rate? And somebody says to me, 20% a month. So that means every month you have to get 20% of those customers back again. That's almost a non-viable.
Yeah, it seems like double digits, you're in trouble. And to think about it, like, what's a great business with low churn? Like Netflix, they're 1% to 2% churn. Like, that is perfect.
Yeah.
That's the ideal situation. So if you're 5% churn, you're probably a little more viable.
You're struggling. Yeah. Now, the interesting thing is, and I try to explain this to entrepreneurs, if you have high churn, that's a sign that maybe your product's got a problem. You should be thinking about what's wrong with the product here. It's good for you to know. If you don't track these, forget pitching people. You should know these because they help you run your business. When I get in a conversation and someone doesn't know their churn or doesn't know their burn rate, that to me is a real red flag, because how are you running your business if you don't know this stuff, right? It worries me that it's sort of randomish. So my statement on churn is single digits, definitely. If you've got double digits, you should be looking to change the product. What's the problem? Wrong target market. Something's wrong. But trying to fundraise with a double-digit churn is very difficult.
Yep. Let's get some more questions. Yeah, go ahead, Adam. It's a lot of trust. I would say, especially the early stage. When you go deeper and you're doing Series A, they will want to get deeper into the data. It probably depends a lot on the investor. Accelerator, we do a shocking lack of due diligence, although we're trying to improve now.
Wild West.
Yeah. I mean, we even to the extent now of like doing background checks, like, yes, are you a criminal? We want to find out.
Yeah, FYI, we actually, you do know we do all background checks, right?
What's that? Yeah.
We actually, okay.
Oh, yeah. But, so
all
I think...
of our investments are background checked.
But not seed investments, I don't think, though.
I can't answer for seed. I don't do those.
Yeah, and then out of all the money I raised, Google Ventures was the only one that did that. And I was like, well, they're Google, they're more conservative. And like their joke was like, well, we can actually find out if someone stole your credit and you don't know. I'm like, yeah, I think I know that. That was sort of their excuse, but I think it was just more liability. Yeah. But early stage, not a lot of trust, although you can make me feel more trust if you want to share analytics with me. So fab.com is probably a bad example just because of what happened and it blew up. But like that dude was like so bravado about it. That he had RJ Metrics, which is a really great dashboard, and he didn't even send decks, I think. And he wrote a post about this, and he's like, if you're interested, he would just share the dashboard with them. The numbers are there. You can see it all there too. So I think you can share, but I think you'll find that like most, it's trust. And if you violate that trust though, that's a good thing about the Valley. Bad actors are pushed out and they're done pretty quick.
Once you get burned, it's you want to see a fast information flow.
Yep.
Fast information flow. If you lie, that investor will make sure that information gets out on it. It does spread. People do talk about it.
We've certainly had founders who have been like, we're doing $50K a month, and then we realized that like $45K was because of some weird consulting business or something like
side businesses.
Yeah, so they've fudged that a little bit.
We started doing a lot more in the interviewing process of a little bit tighter interview. We do background checks. We don't do prove that you have 50K of run rate. The bigger the check, the more due diligence that's there. On an interesting side note, though, there is too much. And let me give you an interesting example. I had investors that wanted my dashboard. They wanted access to my dashboard. I didn't really want to do it, but I had to do it. I spent all my time answering emails explaining what the numbers were on the dashboard for weeks. I mean, like probably 20 hours a week.
You could expose a hole, or they could try and find a hole. Yeah, because they were like, well, why did this go down on Friday? And I'm like, yeah. I'm like, look, you're not running my business. Please stay out of my... So I actually stopped the dashboard. And what I did was I said, I'll send you a weekly summary and a couple of bullet points, because they were trying to run my business. And that can be, so be aware, most investors are too busy, but every now and then you run into one that wants to run your business. Yeah, I worry about those, and those are usually the smaller investors.
Smaller ones.
And we joked
Angels.
A little bit, I don't know if you're here, but we joked about the guy or girl that wants to give you $5,000 and they want all this stuff. And my joke was like, no, you can't even email me. Like it's just I'm raising $5K. It's such a small piece. So that's what you want to worry about. Yeah, the susceptible. You sound like we're like getting a disease. The disease is you. We have to know. But well, I think this is kind of maybe Robert's point about really knowing where check sizes are. If you get into an in-person meeting, that's okay to say what is your typical check size and get the exact figure of what they're looking for. But this is where you can screw up. Where you're raising your like family seed round, and you go to Sequoia, who writes $10 million checks. But I think this data, like Rob said, it's out there. You can track it down or talk to other founders.
You should know their check size. Between Crunchbase, AngelList, You look at, you can, by the way, I used to do this all the time. Find out companies they've invested in, I'd send an email to the CEO, if it's a smaller company. It's a really big company, probably not. But it's a smaller one, I send a company, hey, I'm looking at maybe having these guys investors, I'd love to take you out to coffee. They'll tell me all kinds of dirt. It's amazing what the information I learn from these guys are. But usually by the time I walk in, I know which partner will write the check, and I know how much he's going to write it for.
Hello, hello. Yes. So yeah, like because mobile will have high churn. You may lose half of your users every single month too. So it'll be different. I think that's also to the point though, if it is B2C, avoid sort of the weird vanity stuff. Nobody cares about the Facebook likes. But what would be great to know is about viral coefficient. You know, we're a consumer app, so actually our growth is dependent on virality to some extent. And if you can sit there and say, like, for every user we can bring in, they bring in another 0.3 or what? Yeah. Like you're kind of showing me that like, okay, I'm getting less concerned because when I think about B2C, I may have concerns about scalability. You know, how much money is it going to take? Which is a big reason why investors get into these unit economics and acquisition costs. We're trying in our mind to like figure out, we're like, okay, can this business work on the capital they're getting? Is it going to be a money pit? You know, is it not going to be able to keep growing sustainably too? So I think you're pushing sort of viral coefficient and other good attributes with avoiding some of the vanity type stuff, you know, or internal stuff.
That cost of acquisition is oftentimes a key one. And he's more of an expert than me, but I wanted to mention that one. I look at cost of acquisition, and his statement about scaling is, if it costs you to bring in a user, say $1, I'm making this up, and the cost of maintaining users, you lose, say, $1 per user per month. So I'm thinking to myself, so if I want to get to 50 million users, that's a really big expensive. I got to put way more money than I could commit to this. See how that works? That's what he's talking about in the unit economics area. And that matters a lot to some of the big scaling consumers.
Yeah, I mean, and let's talk like user acquisition just as well too. And really, really important when an investor, he or she is like, hey, what does it cost you to acquire a user? Have a very precise answer. And what concerns me is when someone's like, yeah, I don't know, it's $20 to $30 to get a user. Well, that's a big range. It's telling me like you're not really metrics focused. So the answer you'd actually say is like, it costs us $33.54. You know, or 54.5 cents, whatever it is, really super precise. When all of this stuff, do not be using ranges at all, because it kind of shows you're bullshitting a bit. You know, we like people that are very data driven, and like you as a founder, in the early days, you have to do all this. As time goes on, you build your team, great. You have a head of marketing, and he or she can do that, and that's off your plate. Early days, though, it's all you, and you have to know this stuff. And as I was talking about that meeting where it was like I was stumbling because it was like. I was trying to do math in my head as I'm pitching the VC, and just like you're already nervous and like you drank too much coffee and you gotta go to the bathroom. It's just like all this stuff's going on, like you will screw up those numbers. But like to me, the great founder, it's like, yeah, they're just able to just like bam, 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 hit really, really precise numbers. And it's okay if it's based on small baselines or just like, oh, we've only bought 100 users. Well, it's something. It's a start to work with. Yeah, well, I want you to talk about this because you have really good on sort of pitch and how to. So, yeah, it's definitely not being shy and not like a good example is like you don't have a meeting and then you kind of trail off as you're talking, and that's what I see out there especially a lot too. So confidence is really important. There definitely is. It's weird though. The Valley has this weird forced modesty, where it's like people are the most arrogant, ego-driven people in the world here, but they do put on a modest face, and they're not flashy, but. No, but it's not even that. No, it's like they wouldn't go buy a Ferrari. It was like the second I had $1 million at the bank buying a Ferrari, but like here it's like, no, I'm just gonna get the really nice Prius or a Tesla or something too. So it's different, but that's a whole nother story. I can rant on that. But yeah, confidence is important. So it's like there was a great tweet about like the 3 jobs of a founder, and it was like set and execute vision, recruit and retain talent, and don't run out of money. And like a lot of those take a lot of confidence to set vision and to keep people and to acquire new people too. So they're going to be looking at that thinking like, okay, are you the person that has enough strength and ability to, you know, do this? When I had trouble fundraising, it was because I was at the tail end of the fundraising and I was just like beat down. And one honest VC, there's a few of them out there, was like, I'm not investing because like you're completely beat down. Hey, what's up, buddy? Hey. But so this is where you need to find this. So I think you need to find this happy medium in there where you are stepping up above your comfort zone. I joked about drinking coffee, like you should chug coffee or like a Coke before you go in there, the drink Coke, and and because it brings the energy up. And it's just like you should also record yourself on video. And you'll notice on video if you talk as you normally do, it's kind of boring. But when you're on stage and you're presenting, you actually need to like, and I'm slouching, but like you need to like step up a little bit. And you're like, I feel like I'm being annoying, but you're actually getting a lot more engagement. But let's talk about this, like confidence in meetings, like demo day pitch prep. You're really good at this stuff. What do you?
So I'll cover this a little bit because I actually do a bunch of training classes on related topics. Whoa. Why I don't like mics. You want this one? You want this one? Yeah, maybe a better one. All right, there we go. So I'm going to take his point about confidence. You have to be yourself. You're not going to be. So I'm born and raised in the New York area. I am aggressive. I'm an asshole. It's just who I am. You're not going to be someone you're not, but you can be confident and sure of yourself. That's different than braggadocio. You have to take who you are and trying to pitch them. Well, okay. Don't use that technique. Finding the techniques that work for you is important because ultimately they are investing in you, not the idea of you. So you have to be truthful in how you present yourself because otherwise they get this weird tingling feeling that something's wrong and they walk. They don't know why, so that's why we would pitch completely differently. Neither one is wrong or right, it's simply who we are. But the important point he made, and I'm going to stress it, you have to be both confident and you have to be energetic, you have to be excited by what you're doing. If you're not excited, sure as crap, they're not.
Yossi Yardi, is that his name? The ICQ guy? Israeli investor? Like, he had this great quote where he's like, I only invest in exciting people because I'm probably going to lose my money. I just want to have some fun along the way. But it's like sort of like a funny quote, but I was like, yeah, that's genius. And I could do that a little bit too. So I think you'll find it. But like, as you mentioned, it's so critical that you do step it up a little bit. The journey of being a founder, like, it's long and hard and fraught with all kinds of stuff. Like, that's what they're looking at on you. They're like, okay, are they going to be able to go the distance? And when things get really, really tough, are they going to be strong enough to push through a little bit more? One, to be successful and to make money, to generate my return. Yeah.
One of the things, I'm fortunate, I have sort of almost near infinite energy. I can do a 12-hour day and still be exciting in a meeting at the end of the day, and then go home and crash for a day and a half. But what's important is if you are excited by your topic and you love your company, let that come out. Don't try to be analytical or something. Don't be who you're not. They're investing in you. And once you find yourself comfortable with yourself, you will find that amount of energy is natural. It's easy to do. Okay, you're not going to have it forever. You can't, after 20 hours of pitching, yes, you're going to be tired. But it's much easier to be excited about something you actually are excited about. And for that, I'll mention one note for you. Having a really tough meeting with an employee that's a problem and then going into a pitch is actually really difficult. So usually I try to leave a little bit of space before I go to these meetings so I have at least some recovery. I don't drink coffee or Coke because that's just not my thing, but at least I have some mental...
You have all this energy naturally?
Yeah, just naturally, yes.
All right. Must be all that government work you did.
Yeah, the government work I didn't do. The government work I didn't do. Yes. Okay. And the last note is smile. I know this sounds really weird, but really, smiling is a very contagious, very infectious thing. When people smile at you, it's really hard not to smile back.
I think we'll do one more question, and then we're going to take a break. We have more investors coming up, so we'll do a lot more questions if you have them. We're going to take a break. Now, please look up, Google Stock these folks that are coming in. Try and really think about good questions. I don't want to be up here peppering them with too much. Love to get you guys to come out. As I mentioned, I brought people who I felt are very honest and candid, and not wanting to scare you, but most VCs are not. They're very sort of straight, and also they don't want to be too honest sometimes. They want to push you away in case they want you later on and they want to bring you back.
The hardest part, one of the hard parts about a VC is they really can't give you honest feedback. I mean, some of them will venture to. It's risky to them. Why? It doesn't benefit them. They might want to talk to you later. They don't want to offend you. They need the network as much as you do. For that reason, oftentimes you get things like, well, you're a little early, but you're not. There are a handful of people, and I'm sort of in this category, I'll tell you flat out, no, I think your idea sucks. But that's also why some people don't talk to me.
That must have been that one founder that was unhappy.
Yeah, one. I think that's a slight understatement. But right. I mean, that's just because that is my way of doing it. I know that is not optimal, but I believe that that's just who I am.
Yep. All right, thanks for hanging in there. I know this has been a lot of info. Thank you, Rob, for everything. That was great.